Hello fellow traders! You guys are constantly asking me which indicators to start with and which of them is the most important for beginners. So today I will tell you and of course show you 3 indicators that are not only easy to use but also can really help you make right decisions on the market. So the first 2 indicators will be a great start for your career in binary options trading. And without revealing all the cards, I will say that the third indicator is simply the coolest one of today. And we will of course start with simple tools and then move on to the cool one, number 3. And it can really change your approach to trading, trust me. So keep an eye on every moment of this video so you won't miss anything, and let's get started. Moving averages help smooth out price fluctuation and determine the general direction of the trend. Simple moving averages, SMA, are calculated as the average of the price for a certain period. And exponential moving averages, EMA, they give more importance to the latest price. If the price is above the moving average, it indicates an uptrend. And of course, if it's lower, it indicates a downtrend. But that's not it. Moving averages can also generate a trending signal. When the short-term moving averages crosses the long-term one from the bottom up, it is a buy signal, and vice versa, a sell signal. Beginners are advised to start with simple moving averages to understand the basic principles of trend analysis. Alright, so let's add our moving average to the chart. We're opening the moving average, we're choosing the settings, which is EMA, and we're gonna take a period of 20. It doesn't really matter right now. So when we are analyzing a short-term trend, you can choose from 9 to 30. From 30 to 60, this is for a medium trend, and from 60 to 200 for a global one. It all depends on the way you play the game, on your strategy, and what is going on the market. So right now we can see the moving average indicator is ready to work and ready to give us signals. Let's move on to the next one. If you want to learn more about strategies and learn how to trade professionally, join my online academy. There I share my knowledge and experience, and you will get access to lessons on technical analysis, indicators, and other aspects of trading. Text me on my Telegram and I will help you to become a successful trader. You will find the link to my Telegram channel in the description box down below. The MACD is an indicator that helps traders see changes in the strength and direction of the trend. It consists of 2 lines, the MACD and the signal line, as well as a histogram. The MACD line is calculated as the difference between 2 EMAs, and the signal line is the 9-day EMA of the MACD line. The histogram just shows us the difference between MACD line and the signal line. So when the MACD line crosses the signal line from top to bottom, it signals a possible price decrease and maybe a signal for a sell. And when the MACD line crosses the signal line from the bottom to the top, it is a buy signal. The MACD combines properties of trend and oscillator indicators, which makes it a useful tool for determining entry and exit points for trades. Now let's add indicator MACD to the chart. And we are choosing the settings. So basically MACD line is the difference between 2 EMAs, 12 days and 26 days. And the signal line is 9-day EMA moving line of MACD. Histogram shows us the difference between the signal line and MACD. So we're gonna say, let's save it the way it is, and let's choose the colors. You can choose whatever you want. For now, I'm not changing anything, but you can choose whatever is more comfortable for your eyes. And the MACD indicator is ready to work as well. Let's move on to the next one. The RSI, or Relative Strength Index, is an indicator that helps determine when the market is overbought or oversold. The RSI value ranges from a 0 to 100, and there are 2 key levels you need to pay attention to. It is 70 and 30. When the RSI value rises above 70, it signals an overbought market and a possible downward correction. If the RSI falls below 30, it indicates an oversold market and a possible price increase. So using RSI helps traders find entry points to trades, avoiding incorrect entries. For example, if the RSI shows oversold market, but the price is at the support level, this can be a strong buy signal. So what you need to do is combine RSI with other technical analysis tools to get more accurate signals. Now let's add our RSI indicator to the chart. We're opening the settings and we leave it as it is. 70 and 30 levels and the period of 14. You can change the colors as well for the lines, whatever is more comfortable for you to see on the chart, as with other indicators. And RSI indicator is ready to work and ready to give us signals just like everybody else. Let's move on. Indicators give the best results when used together with other analysis methods. For example, combining the RSI with support and resistance levels to confirm the signals. If the RSI shows oversold market and the price is at the support level, this can be a strong buy signal. Also, we can talk about moving averages and MACD. They can be used together to more accurately identify entry points. For example, when the short-term moving average crosses a long-term one from the bottom up and at the same time the MACD crosses the signal lines, this can be a strong buy signal. So what you need to do, you need to combine indicators to get more accurate signals and you will improve your trading results. Alright, so now as an example, let's see how we're going to use this strategy using MACD and moving averages. So opening indicators, adding MACD, we're not changing any settings here, all of them are standard, and exponential moving average, of course we're choosing EMA, and the period is going to be 150, and the yellow color, my favorite. So this strategy, we talked about it on my channel already, but briefly speaking about it, exponential moving average with the period of 150 shows us long-term trend. So if the price is lower than the EMA, that means that this is the global downtrend. And of course, what we do with the short trend, we are analyzing it with the MACD indicator. So if at the same time we have a signal from MACD for a downtrend and the price is lower than EMA line, that's gonna be the better signal for us for a downtrend than if we only get MACD, for example. So now we're gonna find something that we can work with in real life, and you can see how the strategy works. Alright, so this is a great situation for our example where we have both confirmations. So with MACD we can see that we have a downtrend, green line crosses the red one from the bottom, and the price is lower than exponential moving average with 150 period. And additional confirmation, we can see that there is a little resistance zone. So from this zone, the price was dropping down, and right now we are expecting another drop down. And that's enough for me. That's enough confirmations for me to enter into a deal. We have 2% from the balance, and let's see what's going to happen in just 3 minutes. All right, so the deal is closed in black, meaning that we got the money. We got $260. The profit is around 120, and that's why I'm telling you that it's a good idea to combine different indicators, because we're not only getting one signal, confirmation signal, but we get additional ones. For example, here we had 3 confirmation signals. So the more confirmation you have, the more win rate you're going to get at the end. If you find this video useful, please like it and share it with your friends who are also interested in trading. Your likes and comments help the channel to grow and create more high-quality content. And don't forget to subscribe and click on that notification bell so that you won't miss any of my new videos. I hope these indicators will help you improve your strategies for more efficient trading. So guys, subscribe to the channel, leave a like, and of course, leave a comment what tools and programs you use personally. That's going to be it for us for today. See you in the next one. Bye bye.